Holy smokers, folks, this ain't no dang jokers. Wow, what a video we have here today. Okay, first off, before we get, we'll cover some stock related stuff in this video. I got a bunch of things I need to speak about because this is the last video I'm going to be recording for quite some time. I'm about to take the longest, vacation I've taken from YouTube in my YouTube career. Yes, you won't see me posting for a long time on this channel and the reaction channel as well. So want to first just say thank you everybody that's supported over the years. I appreciate each and every one of you, and I will be back. I promise you that I will be back, but not for a little bit. And I started last year. I took a vacation toward the beginning of the year, a real unplugged vacation, which is very difficult for me. And when I say real unplug, I'm talking about not caring about stocks, the market, not caring about like business related stuff, like nothing like that, right? And did that last year. Did I just gloss over the fact that I shaved and my hair's blonde now? Like that's a whole other situation, okay? But yeah, so it's been I've never taken this long of a trip ever, but I'm going to do it. And the reason, by the way, a lot of us can't do it, or let's say the big YouTubers or whatever you want to say in different categories, is one, we're workaholics, so we love to do it, right? Two, the second part is we're always, we have a lot of anxiety about being forgotten about. Oh, no one's going to remember us. Like if we go away for a week, 2 weeks, 3 weeks, whatever, no one's going to remember us. And then we also have fear about the third pillar is the algorithm. And oh my gosh, if you don't post for a long time, like maybe the algorithm just doesn't show you anymore or something like that. So we all have a lot of fear around that. That's why you see YouTubers, pretty continuously post, because we're just always paranoid about like, oh, everybody's going to forget us and things like that. With that being said, I hope you don't forget me. If you do, hey, I'll still be here. You'll still find me, okay? I'll still be out there. So, and we will still have content coming out on the third channel, but that's going to be like obviously old content, clips, things like that. So in terms of new content, you won't see me around these parts for quite a bit here. So, but yeah, it was a heck of a year last year, obviously. Really grinded it out. It was tremendous in the market. I mean, one of the best years I've ever had in the market last year in terms of percentage return. And then on top of that, I had the Twitch deal, which, plus the reaction channel, plus this main channel. And so it was, plus the private group, obviously. It was definitely a grinder of a year last year. And 2022 was the same exact situation. So looking forward to, having a nice big vacation for once. So yeah, anyways, that's that. I appreciate y'all, okay? Now, let's go ahead and jump into a bunch of things in the market I want to speak about, because since this is my last video I'm going to be recording for quite some time. I figured, well, there's a whole bunch of loose ends and stuff I want to talk about and give guidance out there and things like that in perspective on a bunch of different subjects, okay? So it was interesting. So first off, the public count obviously had a tremendous past year. 78% return, Fidelity has us at on a 1 year, right? It was insane. I do not expect 2024 to be that good. It can be a good year, but not that good. That was a little extraordinary. That was coming off of an insanely beat up 2022 year, right? And we just had a lot of things work for us versus 2022 where a lot of things worked against us. Now, it was interesting because I did this poll because I was curious, like, where people thought the public count would be, basically at the end of next year, or the end of this year, actually, since now we're in 2024. And it was very intriguing because 54% said it would be over 2 million, and then 19% said it would be over 3 million. So the majority of people are expecting it to be, 2 mil or even 3 mil plus, which definitely shows that there's some real optimism in the market, with 27% believing kind of like, a crash kind of doomsday scenario, which actually kind of feeds a little bit more into the AI investor sentiment numbers, which if you look at kind of the bearish numbers, there's been somewhere, roughly around there recently, okay? Now, I have a saying that I always say, and it's a little catchy. It's buy the dip and never trip. And I don't know if everybody really understands what this means. Obviously the buy the dip part's pretty self-explanatory, but the never trip, like, what does that mean? This essentially means never get too bullish, never get too bearish on the market. And so sometimes I get a little concerned with maybe this group and this group right here. This is where you actually really want to be in the market overall. You don't want to get too bullish. You don't want to get too bearish. If you get in either one of those categories, you're going to end up costing yourself a lot of money. And I've seen it time and time again. If you get too bullish on the market, you get too bearish on the market, it's not where you want to play in this game. If we think back to the market in 2021, that was a tripping situation. Everybody was tripping over themselves to obviously pay anything for any asset. We know what that market was, right? If we go back to 2022, people were tripping this again, but it was just a different type of tripping. Now it was like no one wanted to buy the dip. Like, everything's going to zero. Like, it was just a crazy mentality. And both those are not healthy. You want to be something a little more even keel over time, a little bit more of a balance beam approach. And so just keep that in mind in the future. Don't go too far this way. Don't go too far that way. Just stay even keel in this game. You'll be a lot better off, okay? Take advantage of great deals in the market. Speaking about great deals in the market, Alibaba stock, right? So I love this stock as a buy for 2024 overall, and I have spoken about that here recently, right? Now, you don't understand, there's something going on with Alibaba. It's very intriguing. They got a massive share buyback on right now. They used about $2.9 billion in their latest share buyback here. They repurchased about 3.3% of the entire company. Right? Now, they should continue to buy shares and buy shares. Now, this is important to understand whether you own Alibaba, whether you're interested in Alibaba, or even if you own other companies that maybe are doing share buybacks. The best case scenario for, let's say, Alibaba for 2024 is the share price remains cheap. You shouldn't really want Alibaba to go on a big run here in the short term. And the reason being is if you're a buyer of the stock in 24, you can buy as many shares as possible for as cheap as possible, right? Would you rather buy Alibaba at 70? Or buy Alibaba at 170 or 270. Like, obviously, you'd rather buy it at 70. You can buy a lot more shares and accumulate, right? As a long-term investor, if you're a short-term trader and trying to trade Alibaba for the next 6 months, obviously you need the market higher, right? But most people that watch my channel are long-term investors, so you don't care about where Alibaba is 6 months from now. So you want it cheaper so you can buy as many shares as possible. But guess what? You also want it as cheap as possible so Alibaba can buy as many shares as possible. Why they got this big share buyback on right now, right? The more shares they can take off the market, the more it's going to help your EPS long term, right? So, these are major factors that I don't think a lot of people understand how share buybacks really work, and I don't think they really understand how beneficial it can be for a share price to be low during a time period that you have a massive buyback on. Okay, it is huge, huge. Now, Alibaba, would this be a stock I'm interested in buying call options on? Right, it's trading at 7 times 2024 estimates, which is just ridiculously low. And the answer is no, despite obviously Alibaba's growth, despite the business model, despite where the company's headed, despite the low valuations. I wouldn't be interested on calls on this. Now, I'm not saying you can't make money, because maybe Alibaba goes to 150 over the next year or two, and it prints money. But I wouldn't feel comfortable if I'm buying Alibaba. I just want to buy the share straight up. Okay. And the same thing I could say for something like a Nike. I really like Nike stock as a buy in 2024. With that being said, I don't want to buy any stock that is potentially going to, in terms of call options, I don't want to set myself up for a potential problem. Because let's imagine in the back half of, 2024, Nike's numbers start getting really good, which I think is a realistic possibility, right? But remember, there's something called the Fed lags, right? So even if Alibaba is putting up good numbers, Nike's putting up good numbers, imagine all of a sudden those Fed lags we hear about actually hit, right? Which there's a potential the Fed lags could catch up to us in 25 or the second half of this year, right? That would wreck your calls. That would absolutely obliterate your call options, because if the Fed lags do start to catch up to the market in any substantial way, the market's going lower. And then that could mean the market could be in a lower state in 2025, for instance, right? If, let's say, you have options that are expiring in 2025 or even the beginning of 2026, that could put you in a really bad pickle. Now, it's a potential the Fed lags don't catch up to us till 2026 or 2027. At some point in time, what the Federal Reserve has done will catch up with it. It never has not caught up with the market. It always catches up with the market. It's just sometimes it takes a little longer time to play out here. And obviously with the immense amount of stimulus that happened during Rona and everything like that, maybe we're looking at things being pushed out a little bit in regards to that. But anyways, my theory on that is I just don't want to risk it, because we don't know how all this is going to work out. What happens if the geopolitical situation gets far worse? What if the U.S. gets dragged into some sort of big conflict? I mean, who's to say that couldn't happen in the next year or two? If that happens, your calls are wrecked. Your calls are wrecked, regardless of how good the company did, because the whole market would just pull down in a substantial way in that sort of situation, right? That's why I feel much more comfortable just buying the shares straight up and not trying to get greedy with it in terms of, oh, let me buy Nike calls, let me buy Alibaba calls. It might look attractive, but I'd rather just own the shares straight up. And then whatever happens. I can deal with it. I can hold those for long term and feel much better about that. Okay. Now, a company that's ready, regardless of Fed lags, no Fed lags, whatever happens, is Elf on a Shelf, right? This company is in an absolutely phenomenal position. Their products are so low priced. They're so high quality. Even my mom wears Elf cosmetics nowadays. She used to wear Estee Lauder back in the day, but she says Elf quality is phenomenal. But it's a fraction of the price of an Estee Lauder. You can get what's seen as an equivalent product from Elf for 20% of the price of an Estee Lauder product, or sometimes 10% of the price of an Estee Lauder, or Clinique, or some of the high-end brands. So this is why Elf is just set up so phenomenally, and this is why their numbers and the stock has done so well, regardless of Rona, regardless of super high inflation, whatever way you want to dice it. Elf's in a great position. So I love this one. Now, it was interesting because I did see the CEO, Tarang, he did sell 77,000 shares of the stock, and that was kind of to be expected. A lot of these CEOs and executives sell at the end of the year. And, I was kind of thinking, is that a big deal? He still holds around 1 million shares roughly of the stock. So, 77,000 out of, and still having around roughly 1 million shares is not a very big amount. He still controls over $100 million worth of the stock, well over $100 million worth of the stock, right? You can times out 994,000 shares by $130-something stock price. So if he was really concerned about the stock price going down in any substantial way, he would have dumped way more than 77,000 shares. He probably would have dumped, let's call it 400,000 shares, 300,000 shares. That could have been absorbed by the market over a few days period too. So something to keep in mind there. So anyways, that's kind of how I feel about that one. Now, there's some news going on in the Jack Jackson space right now. The DEA basically confirmed that they're considering reschedulization of Jack Jackson. Okay, now here's the deal. Okay, such a move would unblock, because this could substantially affect the stock prices of many stocks in the market. Such a move would unlock significant federal tax reform for the beleaguered legal Jack Jackson business, and also likely advance other federal Jack Jackson reform efforts. But before any of that can happen, the DEA must propose a change to federal law after due consideration. And that consideration is ongoing. Michael Miller, the DEA's lead liaison to Congress, wrote on December 19th letter to U.S. Representative, the DEA has the final authority to schedule, reschedule, and deschedule Jack Jackson and other things under the Controlled Substance Act, after considering the relevant statutory and regulatory criteria and HHS's scientific and medical evaluation. DEA is now conducting its review, he added in the letter, which was first reported by Punchbowl News. That's an interesting one. It's unclear when the DEA's review will be completed. Miller did not offer a timeline for his letter. So, don't get too excited about this yet. And this could be something that takes weeks, months, years. Let's hope not. The government doesn't move too fast. We do know that, right? But we're seeing major steps in the right direction. Obviously, the move Biden made a couple weeks ago, you're seeing several steps in the right direction in terms of getting Jack Jackson federally legalized once and for all, which is, let's just call it what it is. If there was a popular vote in the United States of America to legalize or keep illegal Jack Jackson, it would overwhelmingly win. Because there's people that don't even use a product that would gladly, they're like, why should alcohol be legal and Jack Jackson can't? That's just ridiculous, right? So, I looked at some of my best performers today. Two of my top 3 stocks today were my two Jack Jackson companies, right? Avant Brands was up nearly 4%. The Planet was up about 3%. These stocks could go on some epic runs if things continue to move in the right direction here. And it's not just going to be those 2 stocks. It'll be, almost all the stocks in this space overall, right? Look at this. The Planet's up 11% plus so far year to date, right? Well, a few days into the year. I mean, try to find any other stock in the market that's basically up over 10% year to date. It's near impossible to find right now, right? So this starting out the year booming. There's a lot of excitement here. There hasn't been any excitement in the Jack Jackson space for 3 years. I mean, really, really legit, it's been like 3 years since there's been any real major excitement in the Jack Jackson space, right? So if you watch my video I put out 5 days ago that went all into my portfolio and going into 2024, you notice that I'm sticking with Avant and I'm sticking with Planet. And my views on those stocks are very small positions. They're obviously very speculative companies. Avant's shown a lot of progress in their numbers, tremendous progress. Look at their financial statements over the past year or two. Whew, you're going to talk about some progress. The Planet, not so much, but I'm going to stick with those guys. They're very small positions in the public count. I'm going to stick with them. And, I don't think the industry can get much worse than it's been over the past couple of years. I'll just put it that way. I think it's only better from here. But we'll see. We'll see how everything transpires and progresses here over this next bit of time. Next thing I want to let you guys know about is make sure you don't have money just sitting around not earning you interest right now, okay? Collect interest. Savings accounts all over the place, SoFi, Barclays, CIT Bank, Discover, Ally, all these guys are all pretty much offering 4% plus on a savings account right now. Some of them 4.5%, 4.6%. Collect interest right now, folks, okay? I don't know how much longer we're going to have of savings accounts yielding 4% plus. Maybe it's another 6 months, maybe it's 12 months, I don't know, but I'm just going to tell you in my lifetime, the only time period in my adult lifetime, which I'm 34 years old, and I know I probably look like I'm 18 right now. No, maybe not that young. But listen, this is the only time period in my adult lifetime that we've ever been able to get 4% plus on savings accounts. The only time period. And so take advantage of this time period. Make sure your money's not just sitting in a checking account or sitting under a mattress or something like that. Have your money make you money while it's just sitting there. The sideline money, the excess money, right? If you're not plugging into the market and it's just sitting there, get some interest on it, man. It's literally free money. It's like, would you rather have free money or not? I just actually explained to one of my children, my 9-year-old, that he could literally move his cash into his bank account and then into a savings account. And I ran the numbers with him, and I think he would earn $14 a year, $16 a year. And he's like, oh man, that's 3 extra Pokemon card packs or something a year, right? It's phenomenal. So have your money make you some money, okay? If you're not going to use it right now, you're not plugging in the market, you're not buying a real estate property with it, have it generate you some money in that savings account, okay? Next up here, Walgreens. Walgreens numbers came out here today, but the big news in regards to Walgreens was they cut their dividend. Now, people didn't like this. A lot of Wall Streeters did not like this move, right? Wall Streeters are very caught up in the short term. We do know that. Me personally, I love this move. I'm like, good job, Walgreens. You need to preserve all capital you can right now. Don't go blowing all your money on a dividend. You're not going to get... the stock's not doing well with that super high dividend yield anyways. I'd much rather have the company keep a bunch of that money, use it to either pay off debt or to restructure the business in the best way possible so this company's ready for the next 10, 20 years. So I approve that. I'm happy. I'm very happy they went ahead and made that move. And I think for all Walgreens shareholders, that was a great move. Because I think the worst move was continue to pay out that massive dividend again and again and again. The yield was up to 8%. It was ridiculous, man. I think it was even at close to 9% at one point in time. Now, the company also reiterated its fiscal 2024 adjusted earnings guidance of $320 to $350. That's good news. On top of that, their earnings per share beat. They came in with the 66 cents adjusted versus 61 cents was expected. And then revenue was shocking. Revenue came in as $36.7 billion versus $34.8 billion was expected. They beat by nearly $2 billion on revenue. You'd be flipping my flapjacks. Walgreens with that nearly $2 billion beat on revenue? Good for you, WBA. So the moral of the story is, in regards to WBA, they're coming in with stronger numbers than expected. The new CEOs made a prudent move to cut that dividend, which was silly. And on top of that, the baby boomer generation is aging. And so at the end of the day, when people get older, especially if they reach their 60s, 70s, 80s, pharmacies are much more important, right? Much more important. So a little food for thought in regards to that. Next thing I want to show you guys here, and this is out of Yardini Research. This shows you stock prices and EPS in just a couple categories, over the years, okay? So this one's S&P 500 Communication Services market cap and earnings, and this one here is consumer discretionary. Now, the reason I'm showing you guys this right here is very important, very important. These move together over time, okay? Earnings and stock prices move together over time. You're going to hear a lot of times people say things like, oh, the stock market's just going down and it's irrational, or the stock market's just going up and it's irrational, right? Well, we know there's a lot of bears out there who basically just trying to chalk up the move that happened in 23 as just irrational. It's just ridiculous. Well, is it ridiculous? Look at where companies' earnings are going, especially the most meaningful companies. You want to look at, in NVIDIA, and you want to say, okay, NVIDIA stock's up 200-something% last year. Guess what? Their earnings per share was up 1,000+% last year? Their revenues were skyrocketing on the moon. It's like a night and day difference in the business model, right? Look at Meta's earnings per share over year. It's growing triple digits. So the business models are in a completely different spot, right? And so just keep in mind over time, stock prices and earnings move together. Sometimes stock prices will get a little ahead in terms of making the move up or down before earnings move up or down, because the stock market's pretty good at kind of sifting through and kind of seeing the future a little bit as a whole. Individuals in the stock market are not great at seeing the future, but the stock market as a whole, as a collective mechanism, is actually phenomenal when knowing where earnings are likely headed. This is why there's time and time again, the stock market will be tanking, and people are like, I don't know if it should really be doing that. Earnings are bad, or earnings are great. And next thing you know, 6 months down the road, 12 months down the road, earnings are bad. And they're like, oh, I see why that happened, right? 2022 is a perfect example of that. On the flip side, you can see the stock market starting to beast, and people are like, why are stocks starting to go up, right? That certainly happened in 2023. People are, the first 6 months of the year, like, how are these stocks going up so much? Earnings aren't there. Then all of a sudden, these banger earnings started coming in the back half of the year, and everybody's like, oh, I get it now. Now I understand why the stock market went up so much at the beginning of the year. But over time, folks, these babies move together. It's just maybe they're like 6 months apart, okay? Something very important to keep in mind there, right? Now, the last thing I want to talk about here is, it's obviously it wasn't just a great last year, for the public count versus the market, but it's been a tremendous 5 years, right? We've significantly outperformed the S&P 500 in the public count over the past 5 years, the Dow, bonds, everything, just about everything across the board, right? We've significantly outperformed the market, right? Not a small amount, significantly. And I don't think there's many people that can say over a 5 year span, they got it like that, right? It's all calculated by Fidelity Investments. So now how you get there is a product of not focusing on, I want to try to outperform the market, or I want to try to get a higher 5 year return. I'll explain it to you like this, okay? Two of the best coaches in the history of football, which I know not everybody's an American, so you might not really know much about football, but that's fine. This gentleman right here, his name's Nick Saban, the greatest college football coach ever, and this man right here, his name's Bill Belichick. He's the greatest NFL coach of all time, okay? Now, what these gentlemen teach their players, and the reason they're able to get such phenomenal results year after year after year, is they teach their players to focus one play at a time. Don't focus on the next game. Don't focus on next season or the Super Bowl or the national championship or any of that crap. You focus on this play. If you do not focus on that next play, you get eliminated. But your focus always has to be there on what's immediately happening, what's going on now. And so as an investor in the market, you got to think the same way. Don't think about, I got to try to beat the market, so I need to take some crazy risk or something like that, because you're going to end up probably underperforming. You need to be looking out there. You need to be saying, what are the best stocks I can buy today? And go buy those stocks. And the next month, the same exact thing. And the next month, the same exact thing. And the next month, the same exact thing, right? It's through putting through the work, through the research, understanding these companies, looking at the income statements, balance sheets, valuation, not overpaying for companies, paying fair valuations or even undervalued valuations. Make your moves that way. Do not focus on the end product. The end product will be there if you focus on what's actually going on. You need to focus on what's going on today, okay? Making the best investment decision today. And you do that over a time period, and then it adds up to like, oh, wow, I got a pretty tremendous return over a 5 year span, right? That's the key. That's the key, okay? And so, and by the way, those aren't the only coaches that teach that way. If you look at any great coach in any sport, honestly, in the world, that's exactly how they teach you. You got to focus on what you can control. Do not focus on what is not in your control. Because there's going to be a lot of things that happen in the stock market or in life in general that you can't control. That's fine. It is what it is. Let that stuff play out. Control what you can control, right? And what you can control is obviously doing research, looking at the companies, buying, and those sorts of things, okay? So just a little food for thought in regards to that. All right, guys, appreciate you joining me. Thanks for being subscribed. Thanks for being here. See you after my trip. Also, if you're looking to apply to join my private stock group in 2024, check out the pinned comment down there. You fill out an application. And, guys, we'll see if they can get you in there maybe in the next couple weeks while I'm gone and whatnot. And, yeah, guys, look forward to seeing you in a bit. It's been a heck of a time, man. Been a heck of a time. Been a wild last couple years, I can tell you that much. But yeah, looking forward to, where things head from here. And looking forward to recharge my batteries a little bit. So anyways, guys, see you when I'm back. Much love. Peace.